The mid hours of today morning, we have seen the Swiss National Bank come in and cut rates by 0.25%. However, we've seen the Swiss franc strengthened. So the question is, why is the Swiss franc strengthening? And we've also seen gold rallying and making new highs. So where is gold going to? My name is Samson Mzera and welcome to this session of the Market Watch series, where we take a look at the charts, the news, and what is transpiring. So remember to share, like, and comment on this video. We have been anticipating a cut from the Swiss National Bank for a while now. However, the Swiss franc has been experiencing or enjoying some gains, of which the Swiss National Bank has been expressing concerns about, and especially to exporters. We've seen pairs like the USD Swiss franc enjoying or going lower and lower, although right now we're in a consolidation. And we've also seen for some time the Euro CHF also going lower and lower. Now the problem is today, ideally we have seen a cut. So it's from 1.25% to 1%. However, if you look at your Swiss franc pairs, we are seeing some little bit of gains from that. Now what is happening? In the past few weeks, we have been seeing the market see the SNB express concerns over, for example, the strength of the Swiss franc, and more importantly, we've been seeing the Swiss economy sort of cool off and inflation go back in line with the targets 0 to 2% inflation for Switzerland. Traders have been anticipating that because the economy or inflation is well in control, and the fact that we saw last week the Fed cutting by a huge margin, so traders have also been pricing the possibility of a 0.5% cut. Now, if you look at the calendars, that was not what the expectation was. The expectation was 0.25%. And that is why it is important as a trader to not only look at the calendar, but look at the headlines, look at the news and articles to see what exactly the expectation is. Because sometimes the calendars might not be as accurate in terms of determining expectations. So while we were expecting 1% from the calendars, other readings were expecting the interest rates to go down to 0.75%. And because we have had 1%, or because you have had a 25 basis point cut, then that is why we have seen the cut being lower than expected, and hence the Swiss franc gaining or having a little bit of strength at the moment. And it's looking highly unlikely that they're going to do anything aggressive going forward. And that is why we are seeing the Swiss franc sort of strengthening a bit. Yesterday, however, we saw it weaken throughout or across the board from different counters. For example, one of the best pairs to have traded this week will have been the Australian dollar against the Swiss franc, and we saw that a nice bullish trend upwards from the early hours of the morning. However, it seems as though those gains are being erased at the moment. So where do we head from here? With the interest rates being already at 1%, we'll be taking a keen look at the commentary from the Swiss National Bank. Of course, they're still expressing concerns over the strength of the Swiss franc. So you remember that the Swiss National Bank is very notorious for intervening in the currency markets. So if we see a lot of strength coming into the Swiss currency, the Swiss franc, then that might be some reason for the Central Bank of Switzerland to intervene and start selling off Swiss francs, and that might weaken it. So we need to be very cautious if we see further strength in the Swiss franc. However, at the moment, there is not so much they can do in terms of continuing further cuts, because they're only left with 1%. So if they continue cutting, they'll be cutting down to 0. So they have to approach the markets more cautiously. So we might see them intervening in the currency markets and leaving rates unchanged at the moment. Having said that, thank you for tuning in to this session of the Market Watch series. Remember, if you want to trade any of these instruments, the link is in the description, or you can just go to hfm.com and start from there. And see you in the next one.